Chesapeake Energy Corporation was founded in 1989 by Aubrey McClendon and Tom L. Ward in Oklahoma City. The company initially focused on natural gas exploration and quickly became a dominant player in the shale of revolution that transformed the U.S. energy market. Chesapeake played a pioneering role in developing hydraulic fracturing and horizontal drilling techniques, allowing the access to vast reserves of natural gas and oil that were previously difficult to extract. By aggressively acquiring land and drilling rights, Chesapeake expanded its operation into a shale formation including Barnett Shale in Texas, Haynesville Shale in Louisiana, Marcellus Shale in North America, Eagle Ford Shale in Texas. The rapid expansion helped the company become one of the largest producers of natural gas in the U.S., with its market capitalization peaking at over of $35 billion. Chesapeake aggressively expansion was larger fueled by debt finance growth, meaning it borrowed heavily to acquire land drilling rights. This allowed it to scale operation quickly but also exposed it to significant financial risks, particularly when commodity prices fluctuated. The company also partnered with major oil and gas firms to develop its assets, often selling stakes in its project to generate cash. However, despite this partnership, Chesapeake continued to accumulate debt, which became a major issue later on. Additionally, the company was known for using complex finance strategy, including joint ventures with international firms to secure funding, hedging contracts to protect against commodity price fluctuation, issuing high yields bonds, which carried high interest rates and increased its financial burden. By mid-2010, several factors began eroding Chesapeake's financial position, ultimately leading to its bankruptcy in 2020. Chesapeake's reliance on borrowed money was a major problem by 2020. It had accumulated approximately $9 billion in debt, much of it through high interest bonds, expensive land acquisition, costly drilling operation. As a revenue declined due to falling oil and gas prices, Chesapeake struggled to meet its debt obligation, leading to financial distress. Declining oil and natural gas prices. Throughout the 2010s, natural gas price remained low, making Chesapeake business less profitable. The industry suffered from an oversupply of natural gas, largely due to the same shale boom that Chesapeake had helped pioneer. The situation worsened in 2020 with the COVID-19 pandemic, which caused a global economic downturn and collapse in oil demand. At one point, United States crude oil prices fell to negative levels in April 2020, severely impacting Chesapeake revenue. Leadership and corporate governance issues. Chesapeake leadership, particularly under Aubrey McClendon, played a significant role in its troubles. McClendon was known for taking big risks, including excessive borrowing and aggressive land acquisition. He was involved in controversial financing dealings, including borrowing against his own stake in Chesapeake Wells. In 2016, McClendon was indicted for antitrust violation, accused of illegal bidding practices to manipulate land acquisition prices. However, he died in a car crash the next day, leaving many questions unanswered. Chesapeake corporate governance was often criticized for lacking oversight, which contributed to risky decision-making. To protect itself from price volatility, Chesapeake used a hedging contrast financial tools that look in future prices for oil and gas. However, many of these hedges became liabilities when prices dropped drastically, further exacerbating the company finance strain. By 2020, Chesapeake was struggling to generate free cash flow, meaning it wasn't making enough money to cover its operating costs and debt repayments. The company sold off assets to raise cash, but this wasn't enough to establish its finance. Despite of this effort, Chesapeake failed to raise enough capital, leading to bankruptcy filing in 2020. In June 2020, Chesapeake Energy filed for a Chapter 11 bankruptcy protection in Southern District of Texas. At the time of filing, the company had $9 billion in liabilities, $7 billion in assets. The reason of bankruptcy included collapse of oil and gas prices due to COVID-19 pandemic, high debt burden and inability to meet obligation, operational inefficiencies that made it difficult to adapt to the low price environment. The Chapter 11 filing allowed the Chesapeake to restructure its debt and recognize its business to improve long-term sustainability. After bankruptcy, Chesapeake shifted its focus from natural gas to oil production as oil prices were more favorable. The company concentrated on oil-rich shale basins such as Powder River Basin and Haynesville Shale. It adopted a more conservative financial strategy, prioritizing profitable over rapid expansion. Chesapeake aimed to optimize operations and become a more efficient, sustainable energy company. Although the company reduced its debt significantly, it still faced challenges in adapting to high competitive volatile energy market. Chesapeake Energy dramatic rise and fall highlight both the opportunity and risk of the shale revolution. While it pioneered fracking and horizontal drilling, its aggressive deep fuel expansion ultimately led into its downfall. After extracting in 2020 and 2021, the company re-emerged with a more sustainable business model, but its future success will depend on market conditions and its ability to remain financially disciplined. Chesapeake's story serves as cautionary tale for the other companies in the energy industry, emphasizing the importance of financial prudence, adaptability, and strong corporate governance.